Hi, Jonathan York, Bay Financial Partners. Look at the investment markets. Iran's still dominating the investment scene. Now, there were talks about potential ceasefire talks, and certainly there was a meeting between Iran and the US, brokered by Pakistan. That broke up pretty quickly, and Trump came out and said now, because those talks have sort of failed, we're now going to blockade the Straits of Hormuz, and we're going to stop Iranian ships coming through. But now all of a sudden he's come out and said actually potentially talks are back on and we might get round to having another round of discussions. And that's probably more to do with the fact that the war is very unpopular at home in the US. You've got gasoline prices skyrocketing, oil has obviously moved up as well. So I say on the back of the Iran conflict, which, I really feel that Trump is trying to sort of extricate himself from it without losing face. And he's just finding it very hard to do that. And that's on the back of the latest CPI data, which showed a big increase. CPI was up to 3.3%. Now, bearing in mind the Fed's target for inflation in the US is 2%. But Trump is still continuing his pursuit of Jay Powell as well. And indeed, his Attorney General, Jeanine Pirro, is still trying to pursue that case, even though it's been thrown out by the judges because of lack of evidence. But Trump has come out as well and said that if Powell doesn't leave after his term as a Fed chair finishes, he will fire him. Which is quite interesting because I'm not really sure Trump has the power to be able to fire him on what grounds. And just remember, it was Trump that actually appointed Jay Powell back in 2017. Although he seems to have conveniently forgotten this fact. So certainly Trump is feeling pressure at home now. Consumer confidence, one of the lowest readings for the last 10, 15 years. And that's all mounting to the pressure because you've still got, obviously midterms are coming up in November. And at the moment, it's looking pretty dire for the Republican Party. Now, on the back of the potential inflationary implications, the IMF have come down and revised down global growth and unfortunately revised up global inflation. So rates in the US are sort of holding steady around 428 on the 10-year, 376 on the 2-year, and 488 on the 30. Now, as we're well into earnings season now, again, a sort of bit of a mixed bag. Most of the financials are coming out okay-ish, slightly better on a couple of the big banks, but the guidance is still a little bit sketchy. And that's really all on the back of the uncertain sort of outlook given the Iranian conflict. Now, oil's had a real roller coaster. I mean, it was up around sort of 115. Then when there was talks about, potentially a sort of a ceasefire or a bit of a pause, came back down pretty aggressively and did trade below 80 bucks. Below 90 bucks. But it's back currently around $91 and change currently. Now, that's still well above the sort of 60 bucks it was trading before the start of this conflict. Now, Trump is obviously boasting about the fact that the US is a net exporter and indeed is exporting more oil than it has done for quite some time. Which is all very well for the oil companies in the US, but it's not really helping the US consumer. Now, the UK facing fresh criticism from Trump for not helping with the sort of blockade, the military action. But really, the UK economy is suffering for the higher oil prices. And the same with the EU as well. The oil prices are really having a major impact, and especially as we head into those summer months. It will just be interesting to see what the tourism numbers are doing. Now, in Australia, a little bit of good news that China appears to have relaxed some of its restrictions on the iron ore importation from Australia. That's obviously good news for the Australian economy. Now, here in New Zealand, obviously there's been some pretty good news for the dairy sector with the payout from Fonterra for the mainland sales. That looks to put around $400,000 average into most farmers' bank accounts. Which is obviously pretty good news, and not all of that will be spent, but certainly some of it will be spent in the economy. And the other big news is obviously the clean-up after the recent cyclone that came through the North Island, which again inflicted some pretty major damage. But now it'll just be interesting to see what happens with gas prices, because certainly oil is starting to fall, and say it's below $100 now. But as yet, we've yet to see any sort of relief at the petrol pumps. Now, obviously, with the market volatility, KiwiSaver balances are taking a little bit of a hit. But really, you've got to remember KiwiSaver, it's a longer-term investment. You're saving for retirement, so you don't need to be sort of caught up with the noise. Just look to stay the term. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.